Hey guys, welcome back to the channel. It's a good day here at the Covered Collar because we have a founder in the house. We have founder energy here on a Friday. TGIF. It's Founder Friday. Anyway, we have Matthew Tuttle from Tuttle Capital, uh, and I'm really excited about two of his funds that he just came out with recently called MEMY and MAGO, and that's mainly what I want to talk about. And I have a few questions for him, but if you guys have questions, put them in the comments. Hey, Matthew, how you doing today?
I'm doing great. How are you?
Oh, just fine. What do you think about Bitcoin, man? What's going on?
I mean, I keep buying the dip when it gets into the low 80s,
Yeah,
and then I'll be patting myself on the back, and then it'll go back down to the low 80s again, and then
yeah,
I buy the dip again. I think crypto in general is something that you should own. Um, obviously it's in a correction slash bear market. Historically, those are the times you want to buy. That's what we've been doing. I still like it. Nothing has changed. I'd love it to break over 90 and stay there.
yeah. No, I hear you. I was just wondering. I follow that all the time, of course. But what? But seriously, what do you think about silver?
So I think silver and gold both went obviously parabolic. I think that move is telling you something about the monetary system, what people think of things, fiat currency, bonds. I have not worked out exactly what it's trying to tell you. I have always said that you should own precious metals in your portfolio. And, we also, I don't know if you know, we have BEGs, which is 75% Bitcoin, 25% Ether, 75% gold, 25% silver. And I look at that as something that can be a core product, gives you access to all that stuff. I bought the gold and silver dip today.
Yeah.
We'll see whether I was smart or not. But again, I mean, I've always owned gold and silver, so I wrote it up, and then I saw, oh my God, GLD is down 10%. I have to buy this dip.
Yeah. No, I hear you. I hear you. I'm just kicking myself for not. I was kicking myself for not taking a little off. One of my rules is when I make a double in something, lots of times I'll take half off and just let the rest ride for free. And I almost did that with my silver position yesterday, but whatever, it's fine.
Yeah, I was taking some profits in my silver, not my gold.
Yeah.
My rule is basically once you're about to start patting yourself on the back,
Yeah.
take profits.
On the first time we spoke, you said you have to take your profits before somebody else takes them from you or for you or whatever.
Take your profits before someone takes them from you.
Yeah, exactly. No, that's absolutely a good one. Okay, well, let's talk about meme. It's MEMY and MAGO. Now that's part of your Income Blast series, right? And also BITK and what else? Tell me about your Income Blast series.
Yeah, so right now we've got 4 ETFs, MSTK and BITK, which are zero DTE, where we're writing options on a daily basis, picking our spots when we want to write them, and then getting out at some point during the day, with the idea being we can really target with precision, high probability spots to trade the options, and then we get the overnight returns. We're unencumbered. Now that obviously works better when you have overnight returns, which Bitcoin and MicroStrategy have not had. But once we get to a period where we do, people will see how well these work versus writing a weekly, a monthly, or a quarterly call. Then it rips and you're out of luck. And then we've got MEMY and MAGO, which are our put spreads.
Yes.
Where, what we're trying to do is generate income, but give you unlimited upside.
Let me stop you. Can I stop you there really quick? Can we slide back to the one doing the calls? why were you doing calls on one of them but put spreads on the other? I just wanted
Well,
to ask.
yeah. So BITK and MSTK, we're doing calls,
Yeah,
but we're doing them 0 DTE.
exactly, which isn't
Right.
a bad thing. I'm not saying anything bad about it, but I'm saying why for the different. Anyway, did you think about
So then
doing a
when,
0 DTE put spread?
yeah, so then MAGO and MEMY, we're not doing it because doing 0 DTE calls on a basket would be a logistical nightmare.
Yeah, I didn't think about that. Okay, well, perfect, perfect.
Yeah, I think about these things.
Of course.
And even just rolling our put spreads every Friday, you should see the things we hear from our brokers.
Yeah.
It's that's not easy. If I had to roll, like, Mimi's got 20 positions, if I had to roll 20 option trades every single day, my brokers would have me killed.
I got you. No, absolutely. Absolutely. All right. Well, I want to go a different direction, or I wanted to talk about your newsletter. Your daily newsletter is a must read. I know a lot of guys in Discord, a lot of guys I see in the comments read it every day. I love your heat formula, and I love what you're doing with that. But I wanted to stay on MEMY a little bit. Let's talk about this. Give me some of the holdings you have in there, and tell me about how that fits into your heat formula, and tell us what your heat formula is, if you don't mind.
Yeah, so let me start there. So heat formula is how I invest my own money. And we're writing a book about it. We're starting a wealth management firm around it. And at some point, we'll have a paid version of the newsletter around it. And it stands for hedges, edges, asymmetry, and themes. So hedges, you should always be hedged. Bonds are not a hedge. Gold is not a hedge. But you should always have hedges. Never go to bed unhedged. E is for edges. There are edges that appear in the markets that, for whatever reason, cannot be arbed away. If you find them, you should take advantage of them. A is for asymmetry. Okay. You should design your trades in your portfolio for heads, I win a lot, tails, I lose a little, which is why if you look at the Income Blast suite, I'm a big believer in unlimited upside, because a traditional covered call strategy is the opposite of an asymmetrical trade: limited upside, unlimited downside. Yeah. I don't like that.
Me either.
And then T is for themes. I'm a big believer that you should be invested in today and tomorrow's top themes. But then around the themes, we have a thematic hierarchy that we teach people. First off, identify what are the likely top themes, now and over the next 3 years. Once you've done that, who are the obvious winners? That's where MAGO fits in. I hear, Magnificent Seven, overvalued, this and that and this. If you look at all the big themes out there and look at who the obvious winners are, it is one or more of those 7 stocks. So whatever you think of them, I would argue those 7 stocks are must-owns. The next step you want to look at is, all right, what companies do the winners need to be winners? The infrastructure, the energy, all of that. And then the last piece, well, depends, but another piece is, who are the asymmetrical plays in the themes? The companies that, they could go to 0, but they're the companies that could also 10x, 20x, 30x. Because while I say NVIDIA is a must own, is NVIDIA going to 5x this year? I don't think so. The math just doesn't work. Could a SanDisk 5x this year? Could an Iron 5x this year? Yes. Could they 10x, 20x? Yes. So those are the asymmetrical plays. That's where MEMY fits in. So, I call it, I use the symbol MEMY really because I reserved that symbol a long time ago and I wanted to use it. I think some people get the wrong idea when they think of meme stocks. So like one of my internal guys is like, you should have AMC and GameStop in here. I'm like, no, those aren't real companies.
Yeah.
Also, remember, I'm an investor and a trader myself, and I'm selfish. So I want to design products I can buy, so I don't have to manage that aspect of my portfolio. So what MEMY is it's 20 names picked from the top themes that I think have the most asymmetrical upside, and we'll actively manage that.
Yeah.
You know, when I see another name I like, and maybe, you know, hey, this name, yeah, I mean, you know, I thought it could 20x, it didn't. All right, take that out, add in another one.
Let me ask you, are you the shot caller on MEMY? Are you the only guy that picks the stock? I mean, that's fine.
I am the only guy. I will take suggestions. So I've got, you know, a guy internally. He's my option trader. He's the guy who first looked at it and said, "Oh no, you should have AMC and GameStop."
Yeah,
no, I'm only going to have real companies in here, and I'm only going to have companies in here that I want to buy myself. And I don't want to buy AMC and GameStop. Sorry to all the fans of AMC and GameStop.
I hear you.
Those aren't companies I want to own. And then, you know, and he came back, "Oh, you should have Tesla." Like, no, Tesla's not an asymmetrical play. Tesla's, you know, probably the winner in robotics. And if they merge with SpaceX, maybe they're the winner in space. But Tesla's not going to 10x this year.
Yeah, I agree.
But I will take advice. I'll take advice from retail. You see something, say something. Maybe I'll use it.
I got you. No, but I was just wondering, but you're the man. You're the investment committee. We're looking at the investment committee.
I am the investment committee.
Okay.
Yeah,
well, awesome.
because again, I'm putting a lot of my own money in this stuff.
I imagine.
So
yeah.
you know, I'm putting my money where my mouth is. I don't mind, you know, hey, all right, I'm wrong, whatever. If you give me a stock and you're wrong, I'm pissed at you. And I'm pissed at me for doing it.
I know it because no, I hear you because you're the one that has to bear the responsibility. And if I tell you to buy something, you buy it because of me. I don't get the heat, you do, and I get it. No, I appreciate that. So let me ask you. So the one kind of not critical, but the one question I have about MEMY. So you say in your formula. Well, first of all, I love the idea of it. You basically MEMY is basically your newsletter in an ETF. I mean, or in a large sense. I mean,
it is a big part of my newsletter. So to me, you know, we're writing about these themes and we're looking, all right, who are the winners? And, you know, and it's going to be some of the Mag 7. So really my newsletter is MAGO and MEMY. And then there's another piece, which we'll do eventually, which are the companies that the winners need. So, you know, those aren't the sexy names. You know, if you're looking at AI, those are, you know, the cooling companies, your VST, your VRT, you know, it's the natural gas, it's, you know, all of that stuff, which I think is another piece that you need to own. You know, we just haven't gotten to that piece yet.
Perfect. Okay. Well, I like MEMY. Full disclosure, I have it and MAGO myself and BITK. I'm getting killed at BITK.
Yeah, me too.
I'm just joking. I'll give you a hard time. I stuck up for you the other day. I was on a podcast and somebody made a kind of an offhand comment about some fund that paid a 300% dividend, you know, the first time or something. And I said, yeah, I have that fund. They were kind of trying to throw shade.
Well, and let me tell you,
I said, I like that fund.
Let me tell you why I did that.
Okay.
So, you know, I can't take the trader mindset out of my head. And again, going back to my, you know, take profits when you're about to pat yourself on the back. Yeah. So my timing on this stuff has been awful. But when I launched BITK, the first week or so, Bitcoin ramped, like rallied crazy. So we launched at 25 and we may have even gotten to like 29. So I'm sitting there, comes time for first dividend. I'm like, I'm nervous. Yeah. Bitcoin went up too far, too fast. We're sitting on massive gains. Yeah. I'm going to distribute them. Yeah. You know, to me, that's the right thing to do. I'm going to give people these gains back because I'm nervous about Bitcoin here. And that's why I did that. So it wasn't like, oh, hey, I'm going to come out of the gate with a 300% yield and get everyone all lathered up. It's no, I'd rather you have your own money back than it be sitting in Bitcoin right now.
No, I got you. No, and I agree with that. I wasn't trying to give you a hard time about that.
No, I know. But I know some people didn't understand and thought, you know, I was like, and, you know, now we're paying a much smaller yield. Well, Yeah, look, I mean, look at Bitcoin.
Yeah.
You know, I could pay you 354%, and then we go to zero in 3 weeks. No, thank you.
Would you ever consider why can't the fund, whenever something's getting killed, pay no dividend or whatever, pay only dividends when they have net profits?
So I would love to get to a point in the marketplace when you could do that.
Okay.
I think there is still a massive lack of understanding of the option income space. So, and I get it, because if you look at dividend stocks or bonds, you know, dividend stock is just going to pay you the dividend.
Yeah.
Bond is just going to pay you the interest.
Yes.
But in an option fund, you've got option premium, return of capital, gains. I could pay you all three, or I could just pay you return of capital. And unless you understand, you really don't know what it is.
Yeah.
So you're assuming, oh my God, you know, I'll give you an example. So we run 2x long MicroStrategy. And the first year we ran it, we had massive gains. So I spent $50,000 getting a tax opinion on a way we didn't have to pay a capital gain. Our biggest competitor paid a massive capital gain. So I'm sitting there thinking, you know, hey, I'm a rock star. And I'm seeing people on Twitter like, hey, this fund, I got, you know, a 40% dividend. This is great.
Yeah.
Like, no, you got your own money back that now you have to pay taxes on. And it was a year of gains. And you probably bought the fund yesterday. You got screwed, but you don't understand you got screwed. Like, man, you know, I spent 50 grand in hours with the auditors, and I'm thinking I'm the smartest guy in the world, and nobody understood it except for me.
Yeah, no, I know it. I'm sure that's frustrating. All right, well, I had a question or two from some guys in my Discord. I want to make sure to get to those. I just want to talk to you about option questions all day long. I'm trying to think if I have any more option questions. Hey, do you still sub-advise at Tap Alpha?
We sub-advise Tap Alpha, and we also jointly did TDAX and TSYX with them. That's because we're experts in swaps, and those are done through swap.
Okay, give me a minute on those and the advantage of swaps and stuff, and then I'm going to ask you this other question from the other folks, I promise.
Yeah, so TDAX is 1.3x of TDAC, and TSYX is 1.3x of T-SPY.
Okay.
And, you know, the idea there, and, you know, and I think Cy from Tap Alpha are aligned on total return matters.
Yeah.
So, you know, neither of us want to launch a product where, you know, the underlying is up 50% and we're up 25%, including distributions. You know, I'm never going to tweet, you know, hey, total return doesn't matter. These are different products. No. So the idea behind 1.3 is it gives you a better chance of outperforming the underlying without going overboard. So, you know, we run a bunch of 2X. I'm not going to tell you, hey, buy and hold 2X, you know, MicroStrategy. I mean, you can, and I do sometimes, but that's not what those are designed for. So 1.3, yeah, that's something that you can buy and hold. And the other thing we do, most levered and inverse rebalance daily, which means you're buying high and selling low. We do these within a band. So most days we're not rebalancing. It's really, you know, if we get below 120 or above 140, all right, we're going to go back to 130.
I got you. Okay, no, that's great. I'm glad that you're in on those. I've been hearing lots of good stuff about those, and I don't have those yet. But yeah, those are very interesting. So it's 30% weekly leverage or 30% daily leverage?
No, it's a straight 1.3.
Okay.
And, you know, and we keep it, you know, in that 1.2 to 1.4 band.
But with the rebalance, I got you. I know you explained that. Okay, my bad. Okay. Perfect. All right. So your interview with Dividend Stockpile was really good, and I just got through watching that, and the guys in my room watched that. We had a follow-up question from that. You were talking about BITK, and you were saying that you're selling calls on IBIT for BITK. Had you ever thought about switching that one to a put spread? I mean, I know we talked about that already a little bit, but had you thought about doing zero DT put spreads instead of zero DT calls?
I have. I don't know that works nearly as well than doing the zero DT calls. But zero DT on the put side is something we've played around with. We'll continue to play around with.
Yeah.
I'm open to ideas.
I got you.
There's margin requirements and things of that nature we're going to need to meet.
Yeah. And I guess the caveat, I mean, I'm thinking it through myself. The caveat is the upside of that fund is designed to come after hours, so it's fine that it's a different strategy than the MEMY strategy. A lot of the guys in my room and myself prefer the MEMY strategy. Hey, back to MEMY really quick. You say hedges is a part of your deal, but none of your MEMY positions are hedged, are they?
No. Yeah. So I look at this as purely thematic. So what we're coming out with, and I can't remember whether we talked about this earlier or not.
Yeah.
At some point in the first half of the year, we're going to have Ono out. And Ono is going to be my hedge.
Okay.
And that's designed. Yeah, it's really complicated, which is why it's taking a long time. But that's designed to be what we call no bleed tail risk. So the idea is the 99% of the time the market is going up, we're not going to hurt you. We may be down 1%, down 2%, but when you get a COVID, a 2008, a Liberation Day, those types of moves, we're going to be up big. Now, you get a move like today where, SPY is down 50 basis points. Ono is not going to help. Ono is you get COVID and you're down 30% in a month. We're probably going to be up like 40 or 50%. The idea is you can take it, put it in your portfolio, and it's not going to hurt you. Yeah. Whereas historically, tail risk products, you can't hold on to. They bleed and bleed and bleed until the point where you're just like, I have to sell this. This is killing me. And typically that's right before the market's going to crash.
Yeah, no, of course, it's always right before. I recently had to buy one of your competitors' tail risk funds, but I can't wait for yours to come out. And
I can't either. Again, I'm selfish.
Yeah,
I run that strategy in my own portfolio, but I don't have time a lot. So like yesterday, I didn't have time. I came into today unhedged, which sucks. Yeah, today would have been a perfect day to come in hedged, and I didn't have the time to do it.
You didn't put on your hedge last night, of course. Oh my gosh. And then it's down this morning. And of course.
I mean, and I knew it was going to happen. I had calls and then something happened and all of a sudden it's 4:30. Like crap. I didn't put on any of my hedges. Yeah. The Qs are going to be down 1% tomorrow. And here we go.
Yeah. What I'm interested, when I read the prospectus in there, what I'm most interested in is it said in the prospectus, one of your positions was just I think it was talking about an at the money, just like a straddle at the money, and that monetized intraday or day to day volatility where it goes down 2% one day, and that's what I thought, and it's up 2%.
Yeah, we've got tons of moving parts.
Yeah, but that's one of them, right? I was right about that. Is that one of them?
Yeah. What this is going to be, it's going to be an index that Goldman Sachs is going to create. And then SIBO is going to run on a real-time basis.
Oh, I wasn't aware of that. Okay. All right. I need to do some
research on that. So what happened, so I run this strategy personally. So I filed and it came out and Goldman Sachs calls me. They're like, hey, Matt, we saw your filing. Really interesting. Would you have any interest in us creating an index for you? I'm like, Yes.
Heck
Because
yeah.
all the, that makes, again, my life way easier, because I'm thinking, all right, I've got good option guys on our team, but this is beyond. So I'm
Yeah.
thinking, you know what, this is something that I'm still going to have to do myself. Now that Goldman is doing it, thank God.
But now your guys are going to have, of course, you're going to benchmark your guys against their index, right? That's what index.
Well, no. So the ease of this,
Yeah.
Goldman's going to design the index, and I'm just going to buy a swap on the index.
I got
We don't
you.
have to do anything.
It's okay. I got you. I didn't even think about going the swap route. Well, why is that? Just explain for people that don't know why you would rather do that than another method of doing it. Why is that preferable?
Because the moving parts on this are so complicated, so precision driven, that you've got to have, a team watching this, looking at this on a daily basis. And that would have been me. And it would have taken up a lot of my time during the day. And, outsourcing it to Goldman Sachs, who's got that team who can do it. Just it makes it much easier. Theoretically, we could have made a mistake. I don't think so. We don't make mistakes, but it could happen. But this is going to be easier.
Either. Like when you trade, people underperform their benchmark. When you buy a swap, right? All you have to do is pay a financing fee to the counterparty, and you match whatever the index is. Correct?
Yep. Exactly.
So no fuss, no muss. Okay, well that's exciting. So you're saying you said mid-spring. Do you know what month?
March? Hopefully by the end of March.
Okay.
Again, it's so complicated.
Yeah.
It's taking longer than I wanted it to take, but I also want it done right.
It's good. No, it's going to be huge. I can't wait. I can't wait. Well, so on, okay, here's the question I wanted to ask. What are you targeting on MAGO for yields, on MAGO and MEMY for that matter?
Yes. And I don't like yield targets because, again, I want to be intellectually honest here. I don't want to return your own capital if I don't have to. So I would rather, on MAGO be like 15 to 20%, okay, and on MEMY be, 20 to 30%, and really try to maintain that NAV. Our timing, you never know, you file these things, the SEC has 75 days, then you've got to, lock up the seed capital, get all the ducks in a row. And, you're never going to time anything perfectly. So, market's been selling off. I'd love to be, over 25. We're not, but I'm going to be cognizant on that on the payouts. I don't want to give you, hey, here's an 80% payout, but yeah, our NAV is now 20.
Yeah, I got you. So, and that comes from one of the guys in my Discord. He was saying, does MAGO have to pay mark to market on the synthetic capital gains? Or I guess MEMY for that matter too. Or do they plan to heartbeat the trade or other tax?
Oh yeah. No, we are going to take advantage of everything we legally can to minimize capital gains. So we have, and swaps are the same deal. So we have a very robust operation and very, day-to-day almost contact with our auditors across all of our products, reducing capital gains. And again, I don't think people look at it, but I would say on the 2X, look at what we distributed last year versus what our competitors distributed last year. It was a fraction.
Okay. No, that's good to know. I hadn't thought about that. Yeah, the same commenter was saying, because everyone was watching your video with dividend stockpile, and he just wanted to confirm that your income approach is not overpaying, but strictly based on new money / earn premium. And you didn't exactly use those words because you can't really.
But that, I mean, that's what I'm going to try. You know, again, there are things you can't control, like Bitcoin going from 120 to 80.
So is it true that if you have a fund and the underlying drops 20%, and that fund is doing lightning spreads, and they pay a 10% yield over the past 6 months, that the parents dropped 20%, they're going to have total return of down 30%, basically. I mean, basically, if you follow an asset that goes down, the fund almost can't make money on NAV. Now they can make money on dividends if the dividends overwhelm the NAV, but that's pretty much
right. But you can't make enough to stem the decline. So like on our zero DTE strategies, we're making money most days. But to give you an example, we're up on, so I sold a call on IBIT today and we're up on it, but we're up 5 basis points. So I added 5 basis points to the fund. Now IBIT is down 25 basis points. So I mitigated, what is that? A quarter of the loss by writing the call. But I mean, that was all I could do. When you're writing a call, I'm not going to make 3% unless I'm writing a call that's like way in the money, and then I'm hoping for a massive intraday drop. I'm not doing that. What we do when we write calls is I've got a probability function. I'm writing calls that have a 30% probability of closing in the money. And then I'm looking at the charts where I think I put those probabilities even more in my favor. But on a good day on IBIT, maybe I'm getting 10 basis points. Yeah. So if IBIT's down 3% that day and I grab 10 basis points on the option, I'm down 2.9%. It would be nice for Bitcoin to go up at some point. Yeah.
I mean, it's just, I mean, I think a lot of people get in these thinking the options are magic or something, and they do give you a little bit of, they do create positive, things that happen along the way. But in the grand scheme of things, it's important to know that you're still bullish on the underlying asset. A covered call.
Exactly. Right. Options are not magic. Options are a tool.
Yeah, just a tool. And but anyway, okay. Hey, let's address this question. This one's from Andre. It says, "Good afternoon, Max and Matt. Could you come out with the semiconductor?"
I think Andre's emailed me. I'm going to look at that. Quite honestly, my first interest is in themes. So I think what we're going to do next is we're going to do robots and we're going to do space. But once we're done with the themes, if this stuff is popular, then I'll take a look at the sectors.
Thank you. Okay, good. Let's get some other questions here. And I was thinking maybe there might be a thing that emerges, a theme within a theme. Like obviously, chips, we need chips for AI, but maybe there's a theme that like if someday in the future we don't get chips from Taiwan anymore, maybe like chips in the American ecosystem, or there may be sub themes, right? I just thought that one up.
Yeah, I'm always on the lookout. And again, going back to me being selfish, one of the reasons I write my newsletter is it forces me to do that research, which then I'm using for my own portfolio. Yeah. And if I didn't write the newsletter, I'd get up and probably be lazy and have some coffee and watch Sports Center. But it helps me to write that every day.
No, it's gold. And I always wonder if you get up in the morning and do that, or if you do it the night before, but it doesn't always matter.
It depends. Like sometimes, not on a Friday, because I'll write it over the weekend. Sure. But sometimes I'll be sitting here and it's 2 or 3 and I'll see something like, wow, that's interesting. And, and I'll start writing about it. And then I'll wake up in the morning and all right, that's good. Or, oh my God, this happened overnight. let's add this in and let's add this in. So it just depends. It's really whenever a good idea hits me, I'm going to write about it right then, or else I'll forget about it.
Give me your 3 best moons. You're always talking about moonshots. What are your 3 best moonshots right now? You mentioned SanDisk earlier when we were kind of talking. Did you just say that because it happens to be one of your holdings, or do you particularly?
It happens to be one of my holdings. It's gone up a lot. That's the problem. Where's SanDisk? Yeah, the problem is it's gone from 50 in September to 548.
It's too late. Yeah. I got you.
Certainly I'm perfectly comfortable owning it in MEMY as a 5% position. Would I say, hey, SanDisk is the stock to buy right now? Yeah. This whole area is hot and it could stay hot. But me personally, I'm much more of a counter trend guy. I would rather buy something at lows than buy something that's gone up, from, I don't even know what 10x since September.
Yeah.
I would have rather bought it in September. One area where I've been wrong is software.
Really?
I don't own a lot of it. I own CRM, I own Now. Those are getting their ass kicked. I buy the dips on those. I do think, an interesting area that we're going to start doing some more work on is Chinese AI and Chinese robotics.
Really? Okay.
So those are some areas we're going to do some more work on. The area I used to talk about because nobody else did, which I still think has legs, is space.
Yeah.
That was underappreciated. But then, once Elon talked about SpaceX, all of a sudden everyone was buying space stocks. If you had read my newsletter, you'd already be in the space stocks. But that's an area. Robotics, I think, is kind of the next. And I think of that as physical AI. That's, the next generation of AI that we're extremely early in. So that's something that's of interest. An area that I'm going to start looking into, and I don't know yet, is the move to the rest of the world trade. So I had coffee this morning with a, with a very famous international investor, and we're probably going to collaborate on a lot of projects. He'll stay nameless for now, but you'll see his name pop up in things. And he's got me thinking about the international arena. We already have EUAD, which is Europe Aerospace and Defense. Yes. So I'm trying to think, what's the next EUAD? Because that was up like 80% last year. We have like 1.5 billion in it, and I still think that's a great trade. But now, what's the next EUAD? And I don't know the answer to that yet. But I'm going to start working on that as well.
Heck yeah! I can't wait for the collaboration. I was hoping it's Michael Saylor. I don't know why. Just because you took a picture of Michael Saylor when you're down at the Bitcoin conference and you seem to be friendly with them. But anyway,
we got some other stuff we're working on that'll involve Michael Saylor.
Nice.
We've got an idea for a 15% yield that's an actual yield, not return to capital.
Real yield.
With the volatility of high yield bonds.
So how do you? But is it going to have the upside of MicroStrategy? Is it going to use MicroStrategy?
It's not. It's basically it's going to be an income vehicle.
Just
where we're going to give you 14, 15%, and in the volatility of the underlying asset is the same as the volatility of high yield bonds.
No, I get it. Okay, well, have you filed?
We're playing around. I don't know whether we're going to be able to make that work. I got guys running the numbers on that, but that does involve Michael Saylor.
Nice. Okay, that'd be something we'd all. I think a lot of people would be real interested. We're getting comments that people love EUAD, of course. So does Mayor have an idea for a fund? Did I skip over this? Or did we already talk about this?
No, a short US dollar. Yeah, I mean, de-dollarization is interesting to me. You know, short US dollar is somewhat problematic. If you look at like the currency ETFs, they don't really move a whole heck of a lot. So I don't know that there's a lot of juice in that. But a de-dollarization type of thing is interesting. There's something to do with stable coins. I don't know what it is yet, but you know, stable coins is always something, you know, that I'm thinking of. You know, probably something in the crypto infrastructure. Had a guy on my podcast the other day talking about XRP. You know, there's something there. You know, it's one of those things. I haven't put the pieces together in my head yet, but there is something there. I just don't know what it is at the moment. But I do think like the move away from fiat currency is a theme I want to play. I just, again, don't know exactly how to do it. And I don't think it's just plain short dollar.
I got you. I think the thing I'm most excited about, based on all the stuff you've said, is the no bleed tail risk fund.
Oh yeah, I mean me too.
Yeah, no, it's incredible. So, and I've wanted one of these, you know, I don't know, for a long time. I mean, I've been talked to every fund manager I meet. I try to talk them into doing some kind of strategy, but it falls on deaf ears. But you're the first one that's listened to me. I'm just joking. You had the idea first. I'm just joking.
Well, but I mean, and give me ideas. So yeah. I don't know if people remember, we were the guys who did SARK, which was the inverse ARK ETF.
Yeah.
That was not our idea. So what happened is we had an inverse DSPAC ETF, and people on Twitter were talking about it. And some woman, and I've tried to find the tweet, and I can't find the tweet. Somebody tweeted, hey, somebody should do an inverse ARK ETF. And we're like, holy crap, that's a great idea. So I will take ideas from people out there. So yeah, I mean, keep them coming.
I got one for you. I'll tell you sometime. All right. Well, what do you think? The market's bouncing right now. Well, gosh darn, I'm looking. It will look like the NASDAQ was bouncing, but now it looks like it's turned back down. I just think with this being a midterm election year, and I just am not real positive on this being a real positive year. I wouldn't be surprised if it's more like 2022 or I don't know. I'm just not real positive. But anyway, so I'm staying hedged all year in my high income portfolio. But I have a lot of your funds, but I'm also hedged with some other things. So
which again, I mean that's what we teach.
Yeah,
because you can't time it, so you'll always be hedged.
Yeah, I'm not trying to, but what I did is I added to my hedges. My hedges were at 12% last year because I was bullish, and then I added right in November when it started dropping. I bumped it up another 5%, and then recently I added another 10% to that. So I'm about 60% long, 30% short or something. I'm doing my own long short portfolio because I'm using short income based funds and also things that don't pay an income but that are tail risk funds or box spreads or something like that. But but your funds are some of the keys, and I really have high hopes for MEMY. You know, there's a lot of pressure, in my opinion, on MEMY. Those types of funds, and there's several other companies that have their own types of fund that like that, where the managers can throw anything in there and do any option strategy they want. That really tests the manager's trading ability.
Right, and I would wonder, you know, are those guys traders / investors, or are they really looking for meme stocks? You know, what's retail talking about? Where do I have high option volatility? Where, you know, I don't care what retail is talking. I care what smart retail is talking about. So I'm in like 5 discords. There are people I follow on Twitter. If those guys are talking about something, great. The fact that Twitter on the whole is talking about AMC is of zero interest to me.
Yeah. No, I hear you. You look at a pros versus chos methodology or whatever, and you have
Right.
your pros, and I do the same thing in other facets of. But yeah, no, I love that in using the Joes as a contrary indicator sometimes, or I mean that's what I do. But no, that's a very interesting philosophy. But I just see the market seems to me ever since I just don't think the market can make new highs and have a great year with Bitcoin being in a bear market. As long until Bitcoin improves, I just think it's going to be a cruddy year. But I hope I'm wrong. I mean, but it just seems like it just seems like it's kind of a distribution top, and it's just kind of petering out. I don't know. I hope I'm wrong.
I mean, I hope you are too. I mean, to me, you prepare for the worst and hope for the best.
Absolutely, absolutely. Well, like I say, I'll be happy when Oh No comes out. I'm really happy that you joined us today. I'm going to look to make sure there's no more questions. Inverse Kramer. People are talking about inverse Kramer and stuff. Anyway,
I would love to bring that back. That was one where my timing was just so like when I did SARK, top of the market, when I did SOGU, top of the market, when I did SPCX, bottom of the market. And but you don't get them all right. Kramer was beginning of 2023. If it was beginning of 2022, we'd have billions of dollars and it'd be the best fund ever.
I hear you. I hear you. One of our friends in Discord saying there's a wisdom tree fund long.
Interesting. Okay. I wasn't aware of that fund. I'll take a look.
Yeah, I hadn't. I was not aware of that either. Yeah, I follow a handful of funds, and I call them the diversified divas because they're the funds that the managers are the true talent because they have moved the funds in and out. Like I say, they can use any option strategy they want. So it's pretty much unconstrained, like a hedge fund or whatever. And MAGO and MEMY are have been added to the diversified divas. So they're now a handful of like 4 or 5 funds out there that I think you're right on the bleeding edge of the technology. Yeah, we still need the market to go up. We need the market to go up. But I think if the market does, the ones that are the 5 or 6 funds I'm talking about, yours included, will be the ones that are the big outperformers. So I'm happy you're bringing those out, and I hear positive buzz all the time. And thank you so much for coming on the channel. Would you like to? We have 5 minutes. Would you like to say anything to our audience, or is there anything, or what's the market doing? Is NASDAQ going to make a new low on the day? I'm looking at it.
Yeah, it's not looking good here into the close. Yeah, I mean, the only thing I'd say, I mean, if anyone wants, my newsletter is free. Go to my website, tuttlecap.com. We try to do a lot on education. We do monthly webinars where we've got an ETF hopefully launching next week. That if it does, we're going to do a webinar on that. So, we're just waiting. The SEC has delayed us a little bit because it's a little bit weird and they're having trouble wrapping their head around it. But hopefully that'll launch next week. I'm on Twitter. I try to be as active as I can there. And we have a podcast as well. So, take advantage of our resources.
I've never heard your podcast. I need to check that out. But like I say, I never miss your newsletter. When's your podcast, or who's your?
It's it's off and on. We don't do it live. So I've got a YouTube channel. I think it's at Tuttle Capital. So we do everything on Riverside and just post it on there when it's done. I try to do a lot of thematic stuff. So we'll interview people who can do deep dives on themes or deep dives on strategies or investors.
Cool. No, that sounds great. I'm going to catch that. I think I did see that. I need to go listen to an old episode. Why am I being asked about a UFO fund? What's a UFO fund?
So yeah, that's what we're hoping to launch next week.
Oh my gosh. Well, tell me about that. How could I not ask about that? That's that's malpractice. That's
that's UFOD. It's our UFO disclosure ETF.
Oh, really? Okay. Was this an idea from a retail person or a buddy or a family member or something?
What's that?
Was this an idea from a friend or a retail guy, or was this your
idea? This was my idea. So I mean, I've always been fascinated by the UFO topic.
Yeah.
And I've always thought, and I mean, I know nothing. I may be wrong. I've always thought A, aliens are real, and B, we're in possession of and have back tested and re-engineered that technology.
Oh, I'm sure.
And I've also always thought that there was no way they were ever going to tell us that.
Yeah.
We now have a president who is the most likely of any president to disclose that information, A, if he's even privy to it, which he may not be, and B, if he's allowed to do it, which he may not be.
Correct.
So it's like, you know what? I'm going to launch a fund of the companies that would be likely to benefit from the disclosure of alien technology, but I'm going to make it that even if that never happens, or we disclose, hey, aliens are real, but no, we don't have any tech, it's still a fund that you'd want to invest in.
I got you.
So hopefully that's going to launch on Thursday. It was supposed to launch like yesterday, and the SEC came back and said it's misleading because you're not investing in UFO companies. Like, but there's no such thing. I mean, I can't invest in a UFO. Show me a UFO company and I'll invest in it.
Yeah, I mean, maybe you can get somebody to make an index for you. I'm just joking, but I mean,
the problem is this can't be an index.
Yeah,
I could imagine I go to an index company and be like, give me an index of companies that would benefit from reverse engineered alien technology. They'd be like, what have you been smoking?
Yeah, no, I hear you. I'm just, I can't believe I didn't ask. So it's just going to be a standard growth fund, right? No income.
Standard fund. We're going to, right now, we've got about 35 names in there. Some of them are names you'd expect, and I think some are names you wouldn't. But if you look at the portfolio, it's a portfolio that you'd be like, yeah, I mean, this is a good portfolio.
Hey, by the way, that the symbol on that wisdom tree, I guess, was WTLS.
All right, yeah, I'll take a look at that.
Fishing long short. Anyway, all right. Well, thank you so much. We've reached the end of our time. I appreciate you being here. Sorry about the confusion. I guess I sent you a bad link. We were a little bit late. I'm sorry, everybody. We lost a little bit of time. It's 2:30 on a Friday, and you probably have, or 3:30 on the East Coast, and you probably have positions open, or maybe you do. I don't know if you still got to roll your positions, but if you do, go do it, and we'll let you get to it.
All right, great. Thank you very much for having me.
Thank you so much, Matthew, and you have a great day.
You too.
I'm going to end this stream.